Hey everybody, today is February 15th, and today we're going to talk about the stock market. We're going to talk about how Russia and Ukraine crisis is going to affect the markets, and also what we can expect from the Federal Reserve's meeting in March and how that will affect the stock market. And before we begin, please read the disclaimer. You can pause the video as you read it. Okay, so we had major news today. Obviously, over the last few weeks, there's been concern that Russia was going to invade Ukraine and drag in the NATO states and also including the United States of America, right? And that's going to affect a lot of things. That's going to affect the market negatively if Russia did indeed invade Ukraine. It was going to affect oil prices, energy price. So there's going to be an energy crisis in Europe, right? Because a lot of countries in Europe rely on energy from Russia. So we've been seeing a bit of a market pullback since we had a nice gap up last week. We've pretty much faded a lot of it, and we actually plunged below the 200-day moving average last week, right? And but today, Russia, big news out of Russia is that the president of Russia, Putin, says that he does not want a war in Europe. In fact, this morning, there was reports that the Russian troops are starting to withdraw from the border near Ukraine. The first sign that Moscow is possibly just de-escalating tensions, right, between Russia and Ukraine. So that was good news. That was pretty much the major catalyst for why the market rallied. And this is really good because we talked about how important it is to defend the 200-day moving average, right, which is this blue line. I said in a post on February 10th, 5 days ago, that the market it was trapped beneath the 200-day for a while, and then we finally had a nice rally. But it came down to retest the 200-day, and we were holding it for now. And I said that we want to hold the 200-day. If we can't hold the 200-day, the bears bring the price of the S&P down below 200, the 200-day, it would get really ugly, right? And that's exactly what happened on Monday. Is that we had an ugly close actually on Friday, and on Monday we had a bit of we went out even lower, but we ended up closing a bit higher. And today, this morning, we of course had this good news that Putin does not want a war, that he is starting to withdraw, and then we finally got a nice gap up to push the price of the S&P 500 above the 200-day moving average. So now that we've closed the day above 200-day, that's good, but we want to defend this level. So what do we have to do? What do the bulls have to do, right? The bulls need to defend this gap that we had, this gap up this morning. We want to defend the gap, which is also a move above the 200-day moving average. So we want to defend this gap, and we also want to defend the 200-day moving average, right? We closed above the 200-day, which is this blue line, but we want to stay above because we already went down one time. We came up, tried to hold this support, we failed, but now we're trying to break above and flip this resistance into support, right? If we fail again, I can see us coming down and retesting these lows right here from a couple weeks ago. But if we're able to hold it, I can see us moving up to all-time highs again, right? Sort of similar to what we had back in September and October of last year, right? Where we saw it move down to our midterm moving average, the 100-day moving average, which is the gold line. We tried to bounce off support here, lost it, came back up, dipped our head below this moving average, and then finally got support and just ripped up higher to new all-time highs, right? So that's what we want to see. We want to see us defend this 200-day moving average and then push up higher, right? Defend this level, maybe come down to retest it, or ideally we'll just come like we saw in October, just continue to rip straight up, right, to all-time highs. And I think that this is definitely possible if Putin does not continue to escalate and change his mind, right? If they bring soldiers and troops back to the border of Ukraine, that could be really bad, right? And the market might not like that. And then, of course, with that out of the way, the next important thing is definitely what we're going to see in terms of the tapering and Fed rate hikes in March, right? We had an inflation report on the 10th, which was talked about how the CPI print came out. This was my most recent chart on my Twitter page, right? We talked about how the print was higher than expected by a little bit, and that caused the market to pull back. That and also the rising tensions between Russia and Ukraine just plunged the market over the last two sessions. But now that we got the Russian Ukraine crisis out of the way, now the market is going to be all eyes on the Federal Reserve and what they're going to do. And the next major print is going to be in March, the CPI print, and then it's going to be the Fed meeting in middle of March. And that's going to determine whether or not the market, they're going to determine how much they're going to taper and also how much they're going to how much they're going to hike their rates, right? Interest rates. And that's going to be the next potential source of volatility within the markets, right? The good news is that the volatility is starting to come down a little. It's still relatively elevated, but barring the recent rise in volatility tends to fade and move back over time. So right now we're starting to see the beginning of a potential pullback down to below 20. And I think that if the volatility is below 20, that could really set the stage for a massive rally to the new all-time highs, right? Oops, to new all-time highs. So yeah, for now, the weekly candles are looking really good, staying above the 50 weekly moving average. As long as we stay above and we just continue the uptrend, then overall in the macro term, right? The macro term, we are still in an uptrend, higher lows and higher highs, right? So definitely not a bear market or anything signaling a trend reversal or anything. We're still making higher lows and higher highs, which is good. So as long as we keep doing that, this will likely be seen as a correction rather than the start of a bear market if we can defend the 200-day and continue up higher, right? But the bulls really need to put in the work and defend the 200-day and also defend this gap. And we'll definitely see how the market reacts going forward. Just really quickly, let's look at the fear and greed index. So there's a lot of fear still because of the whole situation between Russia and Ukraine, right? But that also means that there's a lot of upside, potential upside, right? The fact that we are starting to get a nice bounce, we are making higher lows, and now we need to make a higher high, right? We have one high, local high here. Now we want to see the market push up higher, perhaps pull back a little bit and then push up higher again, and we'll make another higher high and a higher low, more higher lows, right? And that will help us stop this downtrend, perhaps reverse it, right? This W reversal right here. So that's it for the analysis today. The market is looking very good. The fundamentals are looking good as well to potentially put in a bottom here and reverse this temporary downtrend, this corrective phase, and hopefully resume our uptrend, which we are in the macro term, right? And we'll definitely update you going forward. We'll see if Russia does follow through with their statement that they do plan on withdrawing troops, or whether they're going to whether they're just bluffing and they're going to deploy more troops, and that will definitely negatively affect the market. But we're gonna have to wait a couple of days to see how this all plays out, right? And give market the time to kind of digest this news and potentially put in a bottom and reverse this corrective downtrend into resuming this macro long-term uptrend and continue the bull market to new all-time highs, right? So thank you for watching this video. If you found it useful, helpful, and informative, please like this video, leave a comment below, and subscribe for updates. I appreciate all your support. Thank you again, and have a great day.